I'd say good afternoon, actually. And we would like to introduce, I'd say, the actually the first podcast series organized by the UEL Centre of FinTech. And today we're delighted, very delighted, to have with us John Bertrand and Katie Mitchell joining us today for this podcast. Now, this podcast is on assessing the recent developments in the crypto space, looking at the opportunities in the crypto asset industry, the challenges, and the role of regulation. And we've got the most able people to actually engage in this conversation. So I'll start by way of introduction. I'd like to introduce John Bertrand. Now, John became senior executive during 30 years of experience in banking and technology at Citibank, FIS Global, and SAP. And John was John assisted in creating the EU directive on international payments. He led Citibank in becoming the first bank to offer live foreign exchange trading over the internet. And at FIS Global, John showed 70% of faster payments fraud and showed that they can be stopped immediately and can be identified. He initiated the 50 million mortgage project as well. At the time, focus at SAP was on real-time transactions, and John was quite actively, played a quite active role in this space. He's also director of 3 fintechs, including On-Demand Payment Technologies Limited, Value Innovations PLC, Cyber Benab Limited, all of which are aimed at providing safe and secure real-time movement of assets. John is a keen sportsman, I'd say, and enjoys significantly playing rugby. He sits on security panels. He also holds an MBA from Warwick and BSc honors from City Universities. He's also amazingly authored 4 books, and we're quite delighted to have John here with us today.
Thank you. I'm pleased to be here. I'd like to point out I like watching rugby. I used to play it, but I never could play it anymore because my body's moved on.
My apologies. We note that John loves watching rugby and has played rugby previously. Thank you, John, for correcting that. Now, moving over to Katie. Katie serves as the Global Head of Policy and Engagement at Crypto.com. Katie has a wealth of experience and works with, at Crypto.com, works with a talented team involved in policy leadership and advocacy efforts with governments, industry partners, international organizations, and basically serves as the company's diplomatic corps. Katie was most recently Global Head of Public Policy at Payments Infrastructure FinTech, NEOM, and significantly achieved things there. And at NEOM, she built and led the company's first public policy function and worked with lawmakers and regulators across the globe to develop policies around financial inclusion, digital transformation, cross-border payments, and FinTech. I have to say, Katie's profile is quite impressive, and I think it's worth sort of actually connecting with Katie or finding much more about Katie, actually doing one's own research. Katie actually, just in summary, actually now, Katie is also quite keen. I found Katie's profile very interesting because she's also quite keen on sports, and she competed as a Division 1 varsity athlete in volleyball and rowing at Columbia University in the city of New York. where she earned a BA in International Relations and Political Science. She pursued a post-collegiate rowing career with U.S. national team ambitions as an elite rower at the Potomac Boat Club in Washington, D.C., and won several elite national titles. She's an Iron Woman triathlete, an ultra-marathon runner, and a successful alpine mountaineer. Wow, amazing, amazing profile. So thank you so much. We're delighted to have you both here.
Thank you.
So the podcast is actually, this podcast is actually happening at a very interesting time. And one of the things that we're quite delighted and delighted that we're able to do at the UEL Centre of FinTech is that we're able to sort of engage in conversations that are happening, that are ongoing in the FinTech space. I'll just share a little about the Centre of FinTech, and then we'll see. So my name is Dr. Iwa Salami. I'm co-director with Dr. Julie Wall at the UEL Centre of FinTech. Now, the Centre of FinTech has been is basically a joint school project between the Royal Dock School of Business and Law and the School of Architecture, Computing and Engineering at the University of East London. And the idea around the Centre of FinTech is actually to be a hub for research in all dimensions of FinTech as one of the key things that we do. And secondly, to engage in sort of facilitating FinTech education, engaging with industry, being at the forefront of policy and regulation in the space, and also to ensure that as a center based within a university, that we're engaged in building this pipeline of FinTech talents and ensuring that we're, if you like, that funnel between education and industry. And as part of one of the things that we do in sort of extending our opportunities as the Centre of FinTech within the university is to engage in knowledge exchange events. And so this is one of them. So like I was saying, obviously there's so much going on in the crypto space at the moment. And, you know, if we listen to all the conversations happening around there, you know, one tends to want to think, oh, actually, there are opportunities, but then there are also challenges. So really, it's just to ask, just to take on board and to find out what your perspectives, both of you, are on certain aspects of the crypto asset industry for now. So I'll start with the first question actually is for you, Katie, and it would just be for you to sort of tell us really what the opportunities are with the crypto asset industry. You could provide a bit of background and tell us, you know, from your own perspective, what the opportunities are for the industry and for people that engage with the industry. Thank you.
Yeah, thank you, Dr. Salami, and thank you for the introduction. And I also wanted to offer my congratulations to you and to others on the Center for FinTech. I think that the imperatives that you outlined are so important, not just in terms of creating additional mechanisms for research and development, but breeding new talent. Both John and I have worked across traditional finance and FinTech, and now we're talking about the kind of bleeding edge of our industry in crypto, and knowledge sharing and talent development through education, I think, are going to be the cornerstone of continued growth and development. So thank you for all the work that you've done and for the opportunity to be here. And I also appreciate that we're starting the conversation by talking about the opportunities. There is a lot of noise in the broader ecosystem, a lot of news and a lot of headlines. And one thing that I think is really important is, to recall why we're here. We have in crypto a fairly nascent technology. It's been around for over a decade. But yet, if you look at the broader arc of payments, financial services, and the digital ecosystem, we're still not just at day one, but at the dawn of day one is what my CEO at crypto.com likes to say. So we have still a tremendous opportunity to leverage these new technologies and chart a path forward for responsible innovation that ultimately creates a financial system which is more affordable, more efficient, inclusive, and secure for consumers, investors, and merchants around the world. Our mission as a company is to have cryptocurrency in every wallet. And that certainly doesn't mean one's physical wallet, although we do have a Visa card, so you could do that theoretically. But the idea of wallets and digital payments and digital life is going to continue to evolve. So what that looks like today will likewise continue to iterate as well. I think it's also important to double down, particularly in this current climate, to educate consumers, merchants, as well as governments in order to shape and support the role that digital currencies can play in the future of commerce. For us, we take regulation and compliance very seriously, not just in terms of complying with the rules of the road, but even working with governments to set forth new regulatory frameworks. So ensuring that we're able to cultivate a global and open system for a whole new segment of the population that hasn't had access to it before means that we must rely on more secure and reputable means of digital payments than we've necessarily had previously. And we believe, and I certainly believe, that crypto and digital assets could play a very crucial role to that end.
Amazing, brilliant. Thank you so much, for that contribution. And one of the things that struck me in whilst you were speaking was you didn't necessarily mention financial inclusion, but from talking about the benefits and the opportunities that individuals that engage with crypto assets have. And digital assets. One of the big things there, coming from just listening to you speak, is the facilitation really of financial inclusion, giving people the opportunity to actually engage in a way that we haven't actually seen before prior to the emergence, if you like, of this technology. So thank you very much. I'm sure a lot will come out of that as we proceed. John, I'd like to turn over to you now. And just to really, hear from you and hear your perspectives on the challenges, if you like, that exists in the space, and how that potentially impacts, if you like, this financial inclusion narrative that exists around the positives, if you like, that come out from digital assets and crypto assets. Thank you.
Yeah. Thank you, Kaki. And I think the thing is, we are at the dawn where we can take individual assets, regardless of where they are, regardless of who owns them, and digitalize them, and then move them. So people, if you take a look at the traditional banking, the amount of unbanked, even in the UK, where we think is still huge. Still, billions of people are unbanked, and all the studies show you that if you rely on cash, you're going to more than it's such a costly environment to be in. So this whole movement, I think, is fantastic. It's enabled by technology, and it doesn't matter who you are; everybody can use it. I think that's fantastic. The trick, though, is now getting whatever we digitalize, and it could be currencies, it could be stocks, it could be art. I do like NFTs, but art. And then you've got the bonds, and then you've got structures where you can get very complex, where you get a small group of people that want to put it together. That has to have some kind of set of rules. Pleased to hear that Katie played netball. not volleyball, sorry, volleyball. I was hopeless. I have very bad hand-eye coordination. So it's make it good in rugby, but not in that.
I'm sure great.
So when we look at it, it's like, okay, there's several streams running through this, and like all startup technologies, there is, and I think the crooks are the first ones onto it, because they go on, oh, how can we do this? How can we take advantage of this? And you see a lot of this, and especially where it's electronic and people don't know what quite they're doing. Next thing, they lose their money. And that's what we've got to guard against. But I completely agree with Katie. We're just at the start of it. It's just moving, because when they brought out, oh, it's a great book about 10 years ago, blockchain, you read it, you think, wow, this is the future. It's still the future, because your entire legacy of the banking industry is going to take years to move. In the UK, we went to decimalisation in 1972, from pound shillings to pence decimalisation. There is one bank out there that still has that system, and they still use it, but they've covered it up. That's how banks are. They hate throwing things away. They just keep it, and what's happening is that the technology is expanding quickly. The technology, I think, has gone by a factor of 5 in 5 years of what you can do with it. And the fact is, we go real time. So in real time, we can actually, if we do it correctly, we can tick all the boxes to make it safe and secure. And then it can be enjoyed by everyone without fearing you're going to be scammed, which is a big fear right now we have in the UK.
I agree, John. And if I can just weigh in on that, I promise if we talk about financial inclusion, we could have a whole podcast on that. It's a topic of passion and something that we're really mindful of as well at crypto.com. And you'll have to forgive me, but I've often kind of recoined or reframed that terminology towards financial access. And it's informed by a little bit of my past career. So in the introduction, Dr. Salami mentioned NUME, and before that I spent over a decade at Visa. And you think about, I think of Visa as a very innovative technology company, but it does represent to some extent some of the legacy players in the ecosystem. And even still, with such investment and breadth, we're still contending with this idea of financial access. And access means the ramps towards savings, towards payments, towards lines of credit, towards a whole host of financial activities. And one, I think, area that's often undervalued in terms of building capital and building wealth is the disparity between men and women in terms of traditional investing behavior, and even individuals and companies in terms of investing. And crypto does seem to level the playing field and does portend, and we're seeing this in certain jurisdictions, has tremendous appeal to those who have traditionally been left out of those types of financial activities. But I do think that areas around consumer empowerment and education are increasingly crucial, and that we as industry need to work as our own individual companies, throughout consortia, and then also with academic institutions and government to think about what not just sufficient consumer empowerment, but what does better consumer empowerment look like? Because part of our promise with crypto and Web3 is that we're building a better version of many different things. So let's not just do it well, but let's do it better. And there might also potentially be opportunities to leverage the same underlying technology that makes this entire ecosystem possible towards different means. So kind of blockchain-based accreditation of different learning and kind of investor tools that consumers can continue to upskill around. So those are just some ideas, but it's to say that yes, this is very important. And much like the broader industry, we're still at the nascent stages of really unlocking potential for crypto, for digital assets, for blockchain-based solutions as it relates to economic empowerment.
Brilliant. Thank you so much there, John and Katie. I'll just pick up really a couple of follow-on questions from just the comments that you've had now, but still very much sort of aligned to what the original questions were sort of following up. John, very interestingly, you'd mentioned that, yes, you're sort of in agreement with what Katie said earlier, and that what your approach, how you're thinking things should emerge, for example, would be we digitize things. So things like, even if things like digitizing currency, digitizing assets, stocks, bonds type of assets, and then using them as mechanisms that we can sort of use to transfer, receive, just in the same way that exists now with crypto assets. And I wondered, though, just as you spoke, what if you envisage the advancements in central bank digital currencies, which for me would tantamount as sort of digitizing currency, really. What your take would be on those, and also to, if you like, if you're also able to comment on some of the challenges with those. Obviously, so many countries are exploring these sort of central bank digital currencies, but I wondered if you could sort of say a thing or two on that.
You see, I grew up in an era where it was heavily male in the banking, and especially on the trading floor. When the first went on the trading floor, they employed people to type in. The dealers would have somebody to type it in, you see. And we came along, and I thought it was quite brave of Citi when they sent me over. The Citibank trading floor in the 80s was the most, it made incredible money, and it was, we came along and they said, oh, we can't keep making this kind of money. We have to get bigger, and the only way you can get bigger was through technology. So we were one of the first to introduce, you could buy and sell currency online, which was unheard of. The dealers were unhappy because it destroyed where they were going. The bankers were unhappy because they were losing their big spreads. Because some of the currencies, if you don't know what the rates are, you could be taken to the cleaners. I'm just saying, they just maximize the profits. I think the phraseology was at the time, let's maximize the profits. And so now we can see that, and we can see that you can see the rates now. It's fine. There was both culturally hard to get through the banking industry as we knew it, and then what's been happening is when cryptocurrency came along, that scared the banks, and it's because they thought it would disrupt their financial flows. And it's interesting because I've had several meetings with the regulators. They're quite happy with NFTs because they don't see art ever hurting the banking business. I know it's a digital art form in itself, but so we have an issue in the UK where the politicians want to make the UK head of crypto worldwide, and yet the regulators want it to be very controlled. So, and it's that difference between the two. Now, the central bank currency, I've got involved a bit of, they're trying to, and it's kind of course they should be doing it, because if I'm UK, I issue pounds. If I'm in America, I issue dollars, right? And it's like, well, if somebody else is going to issue like a dollar and it acts like a dollar, why wouldn't you go there? So you got to, how do you retain that? How do you retain that kind of wealth to you? When they print paper, the dollars, for instance, America, 30% of all printed money never comes back. And when America changed to put more security into the banknotes, they spent more outside of America on advertising than they did in America to say, that's fine, they're going to last forever, just keep them, because as long as it doesn't come back, they don't have to cover it. So, whereas with crypto, one, you're going to increase it really fast because you can do it off your phone, buy and sell very quickly. And then that adds a dimension that we're not used to, which is the speed of how quickly the market, you're starting to see it today, markets moving very quickly. Crypto has moved very, very fast downwards at this point in time, but it's easy to do. So with the central bank currency, it's interesting because they want to retain, and it's something that I never realized, but you can actually, you've got to keep the same amount of currency. It reminded me years ago when one of the banks in America sold more option on a New Zealand Kiwi than there was currency in place. Because they didn't realize, hey, there's a finite amount of this currency. So what they're doing is they're putting it together so you can move the currency and you can do a stable coin against a pound. And it's the Bank of England is encouraging this and trying to figure out a way to do it safely and a way to do so it isn't lost in the cyberspace. Technically, there's lots of answers to it, but at the same time, it's going to take a leap of faith of people to say, yeah, let's take this. And that leap of faith happens more when you don't have choices. So when you go back into the environment, the poorer people, if they can do it quickly, they'll do it. It's because it's interesting. They believe that fashion comes from the poor areas because they've got nothing to lose. So they create fashion and they can then take it on from there. And it's something, I think it's very exciting, but at the same time, it's going to challenge our thinking and our cultures across all countries. So I think that's why, and I think the central bank coin, that's fine. Crack on, boys, and get it out there. So we're not having this fight, oh, you're going to take our coins away. I've actually seen, I was in Rhodesia when they were having 100% a day inflation. Very bizarre, because people don't know what it's worth. And all the cabs had 2 extra zeros painted on their meters, because that was how quickly that was going. So to be able to create, I did like some crypto in every wallet, because when you look at, in the UK, you go to America, you have dollars. You come to UK, it's predominantly pounds, a little bit of euro and something else. But in Asia, there's 5 or 6 currencies, as you'll see in Singapore. People have, because they're used to volatility, and to keep themselves whole, they've if you like, hedged their bets, just in case something happens. And with crypto, you get more choice, so that the individual has more choice of how they can handle their finances going forward. And I completely agree with, I think Katie mentioned, education's got to be important. We've got to explain this to people, because in the early days, it's interesting, because I was typing up some notes on this, and I used e-wallet, and the came back to correction. Are you sure you need e-wallet? So you just add it. But the answer is, it's something that's only just coming in. And the fact is, people were buying without getting if you like, the custodian notice. They just, oh, I sent the money away. Oh, nothing came back. Oh, I've got it. And then next thing you know, the exchange goes bust, leaving people out of money. And that's what we've got to get this structure around, an industry that is expanding quickly. The reason it's expanding quickly is because technology is expanding quickly, and technology is pushing through the digitalization of assets. And I think culturally we have to get to a physical as well as an electronic form.
Thank you, John. If I could just come in there, thanks for that contribution. I'm hearing that you're saying that potentially CBDCs, if instituted, may come in to sort of, if you like, stabilize things a bit. And I'm not sure I got you correctly, but my understanding, if you like, of what you've just said really is that if we can get, CBDCs integrated within the space, potentially maybe have a role in the space. I'm not quite sure how to phrase this, but potentially playing a role in the space that stablecoins play, without wanting to sound a bit funny by saying maybe CBDCs, there's a potential that CBDCs may replace stablecoins, although these conversations are being had in some quarters. And so if I'm understanding what you're saying, you're basically saying if we have central bank digital currencies, having a role to play within the ecosystem, that can engender some stability in the system and facilitate much more, foster, if you like, much more trust and credibility in the system. And I have to say, I mean, if that's what you're saying, that's some of the things I'm hearing. So speaking to someone yesterday, he was saying to us that actually, you would find that at the end of the day, CBDCs may predominate the ecosystem on the long run, leaving projects that are very strong standing. And I think that's an interesting point, but I just wonder, though, because a lot of countries are exploring the idea of CBDCs and still sort of tinkering with whether or not this is the best approach for nations to embrace the potential impact on commercial banking activities, potential impact on, we've got the cybersecurity issues there, the vulnerabilities that could emerge if infrastructures and technology infrastructure or structures that they're built on aren't sound and solid enough, and those various areas. So it'll be interesting, actually. I don't know if you want to comment on that in 2 minutes, just 2 minutes, and then I'll bring Katie in to talk about the regulatory aspects.
Well, I think it helps understanding the cryptocurrencies, because the central bank will be a cryptocurrency, and it sets a standard. You'd expect a very good standard to come out, and then you got something to measure against, and people then have something. Oh, I've got this coin, it's a central bank coin, and I've also got crypto. Because, as I mentioned, I was on the dealing room, and we went through the euro, and it didn't matter to the dealers. There's 200 currencies out there. We'll find something to trade, because that's what they do for a living. So with the central bank coin, they'll set a standard, and oh yeah, so if I'm going to bring out a coin, and crypto coins, they reckon about 60% are fake or dodgy, I now have a standard I can take a look at. How's that compared to the central bank coin? And the central banks then work together with each other to make certain that they flow. So I think it's important, because by going into it, they start to accept that cryptocurrency isn't a fad. It's going to be here. And I think that's very important.
And I think that's a very important point. Sorry, Katie. And I think that's a very important point to actually make, that it's, crypto assets, as much as, various talks that have been had about it, is really not a fad, to be honest. And I think, as you say as well, the more countries embrace the ideas and engage in central bank digital currencies, or explore mechanisms through which those currencies can be integrated with the system, I think the better it is to actually leverage the opportunities that actually exist in crypto assets and digital assets, particularly from the financial access, according to what Katie says, and financial inclusion dimension of things. But I think I'll stop here. Katie, you wanted to add
Sure.
to that?
Yeah, I agree with much of what John said, and I think it's worth, when you look at CBDCs, and first and foremost, at Crypto.com, we largely think about central bank adoption of DLT-based solutions and blockchain-based solutions as a signifier of that mainstreamification of this technology. So whether it's a privately issued token, or a central bank digital currency, or a fiat-pegged stablecoin, all of these, I think, have room to grow and to play within our digital economy. So it's interesting, because in the debate, there's often like this sort of battle royale of stablecoins and CBDCs, and you've seen that in the discourse. And Dr. Salami, when we were together in Zurich at the Point Zero Forum, it did seem as though there were these kind of two schools of thought, from the kind of CBDC maximalist perspective and the crypto maximalist perspective. But as an exchange, and frankly as an ecosystem enabler of digital currency economy, we see room for all of the above, and perhaps we can see a future in which a US CBDC and digital euro are in the crypto.com application, and people are using all of these mechanisms for everyday transactions as well as investments. So I think it's important not to limit ourselves and to just advocate for an equal playing field as much as possible. I kind of go back to my time in payments and think about private payment networks like a Visa or a MasterCard, or even SWIFT as a kind of correspondent network. They all have roles to play, even with the advent of domestic real-time payment systems. And so I think that continuing to see the roles and the different levels and kind of speeds of innovation that each of those types of entities can also provide is important. And it's also, when we're thinking about CBDCs, worthwhile to note the role that they might serve and how that might converge, but also diverge from the broader crypto markets. So at least here in Asia, which I think is one of the first areas globally where we've seen a lot of adoption, not just of national CBDCs, but even looking at multi-CBDC projects. Frankly, there's been a lot of focus on wholesale CBDC as it pertains to trade finance. And that is like the lowest hanging fruit in terms of driving broader efficiencies in the ecosystem. So I'm heartened to see that governments are looking at blockchain-based solutions for that. We have a lot of innovative payment solutions that are fairly robust, for instance, in this region, and perhaps the CBDC plays a role, but we might see a number of other innovations and digital solutions being better suited. Here in Singapore, the Monetary Authority has recognized that, and so they've kind of maintained this open mind and open environment so that there's no one winner. Let's cultivate a responsible and yet innovative environment with the appropriate guardrails so that we can make sure that not just individuals and companies, but really interesting innovations are able to grow out of Singapore for the benefit of other markets as well. So just wanted to contribute a few thoughts on CBDCs because I am a payments nerd, so naturally I have.
And that's really amazing. I like that you mentioned that as a crypto exchange that facilitates the opportunities to sort of transfer funds, if you like, through the exchanges, giving people the opportunity to do that. One of the things that you'd like to see would be to present opportunities for various players in the space, whether you're a CBDC, whether you're different types of stable coins, to give people much more opportunities. And that's really amazing to actually hear, primarily because one of the ways I think we can advance financial inclusion, financial access, getting more people engaged in financial transactions, people that may never have the opportunity to actually engage. And I'm talking about people in far-flung parts of the world that are quite remote, but who have a mobile phone and may have the privilege of having internet access every now and again, the opportunity to actually engage in various if you like, opportunities to sort of transfer funds and receive funds. And I like the flexible approach, because I think that is what will help, both from a government perspective, both from a fintech perspective, crypto assets service provider perspective, to help facilitate this idea. Because without that, collaboration with industry regulators, and when I mean industry here, I'm talking specifically now about the crypto asset service providers. Without that engagement with regulators, policymakers, and central banks, and that working together, I don't think we'll be able to achieve that extent of financial inclusion. And this is across the world now, that can be achieved. So that's a very useful contribution. And sorry, I'm going to ask you the next question, Kate, and we'd probably be wanting to draw this to a close at some point soon. And the next question really is, we see from your profile, your quite impressive biography, that you work quite significantly with governments and regulators, and so you should be familiar, actually. And I just wondered how you see regulation playing a role in all of this conversation and in the developments that we're seeing now in the crypto, particularly in the crypto assets space. And do you think that regulation will be able to resolve some of the challenges that John has highlighted, and some of the challenges that we've seen manifested and confronting crypto transactions? Thanks.
Sure. Yeah, thank you. I mean, I think first it's worth noting that effective regulation provides clarity to the market. It should also protect users and therefore crystallize consumer trust in crypto. So for those who are looking at the bear market and remain unconvinced of crypto and the broader social and economic utility and contribution, I think that increased regulatory scrutiny, although it might seem paradoxical in some ways, actually signals staying power of the broader industry, particularly cementing responsible players and sustainable business models like we have at crypto.com. I also think it's helpful just to frame what's happening in global crypto regulation with a bit of a funny analogy. I always liken it to playing 5-dimensional chess, and I'm a horrible chess player. but I think the first plane or the first dimension is to bear in mind that we're dealing with a fairly new technology, as I mentioned at the onset, and we're also, secondly, working in a fairly new industry that's been born out of that technology. Crypto.com just last week celebrated our 6-year anniversary. A lot of our major competitors are still under a decade old. Third is that the policy environment continues to evolve within markets. And then fourth, markets are also simultaneously considering what do we do within our borders and our jurisdictions as it relates to crypto asset services, but then also ensuring international collaboration throughout, which is in and of itself, I think, a really interesting layer of complexity. And then none of this exists in a vacuum, and there are broader macroeconomic and geopolitical headwinds and trends and dynamics that our industry is absolutely subject to. So all of that sets the stage of a really interesting and dynamic challenge for myself, for my team, for all of our colleagues in the policy space, for all of our friends in government, to think about how do we continue to evolve this industry forward, to take advantage of the wonderful opportunities that crypto and digital asset innovation can afford to economies around the globe, while also safeguarding against key risks. What we've seen, so I'm based here in Singapore, but have a global remit, so it might be helpful just to think about what we've sort of been eyeing in terms of regulatory momentum. While there are various approaches, there are largely kind of 2 buckets through which regulators are looking at crypto asset regulation. One is on, of course, mitigating perceived risks aligned with the intention of traditional financial services regulation. So that might pertain to consumer and investor protection, monetary stability and security, and then ensuring that these technologies are not used for illicit means. But there are also key policy outcomes that are cornerstones of many of the frameworks we're seeing today, and I'm very heartened by that, namely around growth and innovation. A lot of folks have thought about Web3 and crypto as analogous to early internet adoption, and I think it's important to continue to maintain that despite the seeming volume and hype. It's still super early stage and a very, very small set of the population, despite the tens of millions, hundreds of millions who are involved in our industry. there's still a lot of room for growth. So we want to make sure that we are pragmatic and flexible in our regulatory approaches. We encourage any regulatory body to consider 3 key attributes when they think about regulation: that it be modern, fit for purpose, and rather technology neutral. Harmonized, I mentioned the importance of international collaboration and harmonization, and that's important to make sure that there's clarity and not duplication and arbitrage across jurisdictions, particularly given the global nature of crypto. And then lastly is proportionate. So policies should empower innovation while safeguarding against risks. And we think pragmatic policy balances each of those various attributes. But there's just, we don't have enough time to walk through all of the markets and all of the international developments that we've seen, but it's been just a flurry of activity, not just within borders. So obviously across Europe, there was the cementing of MiCA, which is the first major global net new crypto asset regulatory framework. We also have a lot of jurisdictions who have fairly flexible and yet comprehensive financial services frameworks that are fit for purpose activities. And there's a kind of a reconciliation of, do we need a net new system when we have a fairly good one, and maybe all we have to do is expand the perimeter a bit more and make sure that we're capturing for some of the risks. So several major jurisdictions are perhaps taking that approach as opposed to a net new regulatory framework. And then on top of that, as I mentioned earlier, there's this broader international alignment. So we've seen the Financial Stability Board as being increasingly active, OECD on the tax front. IOSCO just came out 2 days ago to announce within the FinTech task force the crypto digital asset working group, and then also the DeFi working group. Let's not forget the multilateral development banks. I mean, everyone's involved, and that can create, hopefully, additional harmonization and collaboration. I think it's really important for companies like Crypto.com and other leaders of industry to engage, to make sure that there's that kind of consistent treatment across borders, particularly given the international nature of our industry. But suffice it to say, it's a very exciting time, and conversations like this, I think, are more important than ever.
Thank you so much for that, and I can't agree with you more that international cooperation would be quite significant in determining the success of effective regulation of the space. So cooperation amongst all the countries, well, key countries, if you like, potentially, hopefully, countries across the world, actually, and also integration of regulatory approach from the international standard setters, as you mentioned. So IOSCO, the Basel Committee, engaged with the work of the FSB and the like. So all quite key there. And I have to say, actually, that the FCA, I know John had mentioned that there's that tension between sort of us here in the UK wanting to be the global hub for crypto assets transactions, but then the tension with regulators. And I have to say, actually, the regulators here, particularly the FCA, are showing a certain degree of wanting to engage in conversations, such as we saw in the May and June crypto sprints that brought together industry players, regulators, technologists, and a few stakeholders in the space, just to get on that conversation. So there's a hope there that we're kind of making progress in the right direction to advance developments in the space. So John, I just wanted to find out from you, perhaps give you the opportunities to comment on what Katie has said. And you know, I know in Katie's address she spoke a bit about, you know, without necessarily mentioning it, about the limitations of regulation. I wondered if you wanted to add to that and how you see regulation playing out. I'm very conscious that we're fastly running out of time, so you know, if you could kindly keep it brief, that would be.
No, I'll be very brief. It's interesting because I think the regulation needs to look at two areas. One was the crypto assets itself, and the second is the supply chain. And I've spent a lot of time in trade, and crypto is trade should be dying to go crypto because of all the paperwork, of all the various assets they got, keep swapping assets around, and some of the delays because the paperwork hasn't come or where it's got to be, and the shit won't go because you need certain rights to before it can go. All that in the crypto world reduces like from 24 days down to hours, and to me that would really speed up world trade or get people stuff to market quicker so people can then see, oh, this is how we can get it done, and then we can get it done. I think what Katie said, yes, I think it is improving. I think the FCA is working on it because the UK historically has led with financials, right? You take a look at GDP, financial services is a very big thing. And it's big because we were taking risks, we were doing stuff, and we have to do that with crypto in the crypto world. So completely in alignment with Katie, I think that it's great, we're helping them, and we've got to keep it coming, because otherwise I think it'll improve people's lives tremendously, regardless of where they are. So I'm very bullish on crypto in all its.
May I just add something really quickly, because you prompted it, and I apologize if I run us over time, but I think that both what you've illustrated, Dr. Salami, and also John, in your respective comments just now, is something that I think is quite important to impress upon, which is, given crypto continues to evolve, and while in principle blockchain technology and there's kind of a theoretical world in which folks can consider and treat regulation on the academic front that's quite important, but at the same time there's like practical and very tangible learning that we need to do whenever we're encountering a new technology. Imagine theorizing about the internet if you never opened a web browser. Like it's sometimes hard to bridge that gap. So I want to commend regulatory approaches that are studied and go even beyond studying to a test and learn environment. On the first front, and we are seeing I think really good efforts out of the US government and the broader interagency after the Biden executive order, where there's what's called requests for comment. So the Department of Commerce issued one recently. The Department of U.S. Treasury recently issued a request for comment. The Australian Treasury has done the same in sort of their typical approach to soliciting industry consultation. Obviously, the UK has been really diligent, not just broader treatment of digital assets, but even with bespoke issue areas. They've been diligent across the various regulatory entities and aspects of government to solicit feedback, but also commending the likes of Singapore that are kind of taking that test and learn approach and launching pilot programs where they themselves are kind of entering the sandbox as it relates to the token economy. So I would encourage any individual who is curious about crypto and has been reading and listening to podcasts to do what I did when I took this job and did prior to when I was dabbling in crypto, beyond reading the white papers and listening to discussions is to try it out, to see what it's like to mint an NFT, to try and bid for one, and to test and learn yourself. And similarly, I think it's important for governments to play with and to seek out the real functionality and value of this technology in order to understand it better, ultimately regulate it pragmatically, So we'll just end with, or at least contribute that element of what we think makes for a sound and innovative approach to crypto regulation.
Brilliant. Thank you so much. And just to add that obviously the risks still exist, sort of risk to retail investors. People are still we're still quite aware of that. Hence the interest for regulators to protect retail investors, and to also just say that actually it's very interesting. Just over the past couple of days, I'd say you mentioned the U.S. Treasury. Department of Treasury sort of calling for this consultation paper to ask about the, for contribution, if you like, for, assessing the future role for crypto and regulation. It's interesting also that I think it may have been yesterday as well, the UK Treasury actually released the same type of call for consultation for the direction and approaches to sort of regulating crypto and the potential of the industry. So all of this is just an indication that, like John said, it's not a fad. And I think the more countries begin to embrace the idea and think of ways around achieving effective regulation that won't happen without international cooperation, really, I think the better it would be for everyone, really, everyone, industry players, consumers, people that need financial inclusion, needs to be financially included, or financial access. I think until we get to that point, really. And so my take would usually be regulation for innovation. So regulation that facilitates innovation, regulation that's so needed to facilitate innovation. So just as a very last comment, I just wondered, John, if you'd like to just say a few words on your opinion on the future of the crypto space. Just very brief, could be 1 or 2 sentences, and the same also to Katie. We'll start with you, John.
I think it's very dynamic. I think that the crypto coins and crypto shares, when you break it down into tokens, so that people can, if you like, buy a half of Apple share on a card, go into a store and buy coffee with it, because with the regulations attached to those various disciplines in real time, they can all tick the boxes. Oh yes, yeah, you've got the token because they're allowed to tokenize Apple shares. Oh yes, I can buy that and give it to you in the currency you want. If it's a fiat currency, that's fine. If it's a cryptocurrency, that's fine. Depends what the coffee shop wants to charge or wants to charge you in. So it gives you tremendous flexibility. And then you can take a look around and say, oh, perhaps there's something here I can work on. And I do agree with Katie. Just try it. It's the classic. Just try it and see if you like it. If you do, great. Because it's here. It's here to stay. And every time you turn around, the size of the markets over 3 years, it's trillions. I think it's fantastic.
Thank you, John. Katie?
Yeah, thank you, Dr. Salami, and thank you, John. And Dr. Salami, I did appreciate your sort of conditioning around, ensuring that one is educated and comfortable with the associated, risks, and it's important to learn as you dive into any new activity, and crypto certainly, as we have crypto.com University as part of our offering, and you can go as kind of entry level to sophisticated in your journey of understanding the various assets and activities as it relates to the space as you'd like. So I think we're on an endless education journey there. But in terms of providing some reflections on the opportunity at hand, I mean, I would really appreciate it that we started this conversation talking about the potential, and particularly the potential around broader financial empowerment and impact. And I think it's incumbent on us as industry to continue to build new solutions, to build products that are beneficial not just for consumers, but for broader economies, and to build bridges with our friends in government to make sure that we are constant brokers of understanding between the innovation and the known and important imperatives that regulators have. So I guess here we are building away is what I would leave with. And it's quite an exciting time to do it.
Thank you so much. And I totally agree with you, Katie and John, as well. Like massive, massive opportunities, particularly also when we think of conversations around the advancement of the metaverse and possibilities for industry, and not just actually only industries, also actually states, and the role that digital assets, NFTs can play in that space as well. And so, in sort of looking ahead, looking at the approaches to regulation, one of the things that I'm very much sort of in favor of is for countries to be receptive as they approach regulation, approaching it with a mindset of wanting to facilitate innovation, but facilitate innovation through regulation, but regulation that's effective, that doesn't stifle innovation. So on that note, I'd like to say a very big thank you to John Bertrand and Katie Mitchell for joining us at the first UEL Centre of FinTech podcast. My name is, again, Dr. Iwa Salami, and I'm the co-director of the Centre of FinTech. Thank you.
Thank you.
Thank you.